Happy Saturday and Super Bowl Saturday, I guess. Saturday Bowl Eve, option traders. Anyway, hope you're enjoying your weekend. And this is the option trade review for Saturday, February 7th, 2026. We've got 18 open trades, and we took some nice profits yesterday on Friday. So let's go through them. So AMD with a really nice bounce and a well-timed entry into our long-term combo play. And since we got 72% on in one day, thought it would be appropriate to take some off. But for the most part, this is going to be a long-term trade. And I do have a profit target at a double. But after that, we will probably split them to a triple and quadruple because this is a long-term trade, I think, at least until we get up into the 250 range. In any case, MACD is negative on this thing, and we did bounce off a low RSI, and that was part of my decision to put this trade on, in addition to liking AMD for the long term. Avago is another one we took partial profits on yesterday. Nice bounce. Really never closed below this red line, the 200-day moving average. MACD looks like it wants to flip positive again. We took a 50% profit target on our first tranche, and this one is a longer term swing only through May. Didn't go with a leap on this one. They're going to have earnings coming up soon. I think. Do I have that in here? No, we're yeah, March 4th, 2026. So got lots of time until that happens. But Avago, a nice bounce after really going all the way from 414 at the high to 295. So it lost a good $120 before rebounding. So this is the kind of stuff, guys, you cannot anticipate, and which is why when you're trading up here with momentum and it starts coming down, you just don't know where it's going to end. Better to take close the trade and wait for things to settle out than try to ride through this. Otherwise, this is all going to be resistance on the way up. But we'll see. Avago, another name I really like. Costco. Getting back up to that $1,000 mark. I didn't think we'd see that for a bit longer, but here we are from 844. Remember, I was telling you this is the place to buy it, and sure enough, it's bounced 56 bucks from the lows. So we took first profit target on these at 1625. And then we've got our next profit target coming up at 2150. Costco doesn't report earnings for a while, so yeah, I don't have that on here. Let's see if they list it. Yeah, on March 5th, somewhere around Avago. So we've got about a month before we have to worry about it. But this is a nice trade so far, 960. And the only disappointing part is that this is fully in the money at this point. So once again, was a little bit too tight on this spread, but again, I don't want this stuff to get too pricey as it was. It was 1075, and once these options or option spreads get over $1,000 per spread, then I become a little bit sensitive to that, especially for the members with smaller accounts. Fleur had a nice bounce, but came off the highs. I thought we were really heading for a stop out, but candle closed mid-range. We are up a whopping 6% on these. They have earnings coming up, not this week, but February 17th. So we can see what happens next week. And if we can take out this PSAR stop at 47.88, then we could head back to these highs back here at 51. And that would be nice for our call. So fingers crossed. It's looking good. MACD is neutral to sideways, and we've got an RSI that's on the rise here, not overbought. So got some time in terms of this appreciating into earnings. And given what the XLI looks like, the industrials, it ought to get in gear and here's XLI and all-time highs as I showed in the previous video, but FLR is kind of like putzing around, if you will. HRL, could this be a bull flag? Hopefully it is. MACD is really sideways at this point. We are getting closer to break even, as if that's anything to celebrate. But we've got a nice appreciation off the bottom. Here at bottom back in October 31st has been the low so far, 2103. I don't think we'll see that again, but we have a long time to go on this trade. And as you can see, my first profit target is not a double, it is a triple. And I may even up that if we start getting some momentum here. So I would like to see HRL start picking it up a bit, especially in light of how well the staples have done so far. Intel, looking really good. And we were lucky to grab this off the bottom, decline from earnings and heading right back up again. So we are probably down to our last one. So we have the 1/6 position left, and we are up at 216.4%. So we bought these at 285, and they're currently pricing at 712. So we are more than a double, at least where they stand right now. So they've come in a little bit. No, actually, it's 903. I keep mistaking the screen one. The screen number here is the average of all our cells, and this blue number is the current price. So we sold our last tranche at 950, and they're currently at 903. So we're doing good here, and I may even change this if Intel starts running. I'd like to see it back at the all-time high. So a nice trade for us so far. JP Morgan, after this really spin out on Thursday and long tail, we had a really nice day on Friday, up almost 4% and giving us our first profit target on a very long-term play. We've got basically 62.5% on our first tranche. And again, this is a long-term play. I usually like to wait for a double on these, but given how pricey this was, we paid $14 for this. I wanted to take some risk off. Hopefully you're participating in this one. And right now you can see that my next profit target is up at 28, and we closed at 22 on Friday. So we captured a nice gain on Friday with the pricing and the timing of taking those profits. In any case, another financial we have is Morgan Stanley, and I'm a bit disappointed. And I mean, after this beautiful candle on earnings, it pulled, I guess either Meta pulled a Morgan Stanley, or Morgan Stanley pulled a Meta, came all the way down and just gave back the whole gain, and then some, undercut the low of the earnings date. We can see MACD is definitely negative, and the fast line is about to cross below zero. Implied volatility is coming in a bit, so let's see if that calms things down. But this was a meager bounce, up $4 on $180 stock, 2.34%. How did Goldman Sachs do on Friday? That was up 4.3%. So, I mean, it's suffering the same fate, but it was a bit stronger than Morgan Stanley. And I thought Morgan Stanley was kind of the better of the two in terms of trading, but it is what it is. We are back to 4%, but this was a roll, and we are trying to kind of repair that other Morgan Stanley put spread that we had, put spread, and we've got a ways to go. So it's still at $4.80. We rolled those other ones out to $5. So we're not taking profits until we get under $1 on these to recoup our costs from the first roll. Now is definitely testing our patience. It's only been on for a couple of days and we're already down 96%. The 1 day bounce is all it was, and we are traversing the lower Bollinger Band. And to think that we took out and made a new 52-week low on Friday and hitting the $100 mark. I mean, if I zoom out and show you the stock where it's been from 240 to 100, that's what bring out my calculators. 100 over 240. I mean, that's a 58% decline in the stock. So really, really terrible action in ServiceNow and consistent with all the rest of the software stocks. But we'll see what happens here. We've got 185 put spread. We did close above the short strike. That's the only saving grace, but we have until February 20th. So we have a few days, but the likelihood is we'll be rolling this out. And this one reported earnings on 1/28. So we have at least a few months until the next earnings report. NVIDIA, beautiful day yesterday, still in this long-term congestion. And until we get above and close above 200 again, this is just in a range. Put this on a weekly chart, and we've gone nowhere since we initially traded here in July of last year. So in July, we closed at 173.72, and we hit a high of 183, and here we are, right at 185. So this has been a sideways go nowhere. Even though we made a new all-time high, we're back to where we were in late July of 2025. But we were able to, on our call spread, we took advantage of the dip here, switching back to a daily chart, and caught a nice profit on our first profit target, about 41%. Didn't quite get to 50%, although if I would have been a little bit more patient, we probably would have gotten that 50% since it did close up 47.6%. So not bad for NVIDIA. Call spread, our first tranche at 41%, and then we'll look for essentially a double on the next one. Hopefully, NVIDIA gets into gear and starts moving and leads the way among the chips. We also have a bull put spread here, and it's back in gear. And right now we are up 44% on these after being a bit underwater on the rest of them. We harvested profits at the halfway point. We have until February 20th on these. And earnings is not until the 25th. Yeah, 25th. So we'll probably end up cashing these out if NVIDIA stays above the 170 mark, and I think it will. What did we bottom out on? At 171, we didn't even touch the short strike of this bull put spread, so we'd like it to stay away so we can keep the rest of this and then roll out to probably a March one for over earnings, since this has been a perennial roll on NVIDIA since this worked out so well. Now Palantir, again, another one of these great earnings, poor stock action. I mean, you could tell by this candle that they were selling into it. So it opened up at the high and never went higher, and opened up at 165, closed at 158, and even Dan made a note about this thing not going higher. And then a 2-day decline after Monday's earnings report. So this is after the report. And Friday, we had a meager bounce up $5.89, better than a stick in the eye, but MACD is solidly negative. And I like this stock even right here for the long term. And if you're looking for something to stash away for months, if not years, you won't be disappointed, in my opinion. So here's Palantir. we are down 35% on this roll. So we already rolled this, and I don't have a short-term profit target here. I want to, since we did roll this once and we lost money on the roll, we have a ways to go on here. So given that we have until March, we have the 155 at 125 put spread. So we are in the money. But we did collect about $12.25. I want to make sure that this is right. 155, 125. Yeah. So with the time that we have on here, we can see what might happen. Make sure we've got this right. Yeah, 155. Yep. 155, 125. So it's $30 widespread. All right. Next one is QQQ. Now, this one was a bit disappointing yesterday. I thought we would get at least to a first profit target. And this is kind of a lesson in what's known as Vega. And so we have the 603, 616 call spread. And when you have volatility collapsing like it did yesterday, and even though this is a short-term option, let me close this down. So the 603s are pricing at 14.27. So we'd have to buy those back for 15.44 and then sell two of the 616s. If those after hours numbers are correct, we'd have to pay $1.62. So we are definitely in the valley of death, but it's very soon to say. And we have what is short is a 603 option that is a 62 delta. And we have two of the 41 deltas. So we are definitely positive delta in Qs, but when you take a look at and see, and I know we haven't explained Vega, but Vega is at 45 here for the longs, and it's also for the 603s about 44. So not much of a difference, but Vega is the sensitivity of an option to implied volatility. And if you're positive Vega, which we are, because we sold one Vega at 44 and we bought two at 45. So we're net long, call it 46 Vega, right? Yeah, 46. Sold 44, bought twice, or have twice at 45. And when volatility gets crushed and you're long Vega, that affects the longs more than the one short, two longs that more than one short. And that's perhaps why the 616s didn't appreciate as fast as we would have liked them to get us a profit. That doesn't mean this trade is doomed. We just need more upside on this so that the rate here of the 616s starts going a little bit faster. So let's take a look at this and take advantage, see if we can see anything. So we have this, where's my price slices? Okay. All right, so let's change this to 1% and 1% here. All right, so our delta is currently 23.34 with the short 603 and long two of the 616s. And therefore, it's like we're currently long the equivalent of 23.34 shares. If the Qs go up another percent, we're equivalent to long of 34 deltas, 2%, 45 deltas, 3%, 57, and you get it. Obviously, if you go down, it's going to decrease the delta. So we are in the valley of death, as you can see, and just right here, and we need to get out of there. but we have plenty of days ahead of us. I wouldn't say a long time here, but there's plenty of time for this trade to still work out. And we just need a little bit more movement. Again, we don't have to wait, and we will not wait for expiration for this thing to work out. But I thought I'd show you a little bit about this, and that, yeah, it's, if you want to do this trade, you're going to collect $1.61. So I definitely wouldn't do this one at this point. The big move has come and gone, but this one is going to have to be managed carefully, especially if we stall out here and we stay above the 603 level for any length of time. Then we'll have to cut this short and call it the wrong type of trade for the environment that we're in. All right, enough about that. So let me get to the next trade, Rocket Lab. So after closing below the 50-day on Thursday, a nice bounce, and above the 50-day, though, MACD didn't react much. It's still looking like it wants to head below the zero line. Although it had a nice day, it was up 9%, and we're only down about 33% on these. If this loses steam right into the green line here, the 21 EMA, then I might call this and say, let's get out of here with our profits intact from the prior trade. We were probably too aggressive in setting up the second trade. When it came in a bit, I thought we would catch a nice pullback and another run up to the upside. But these stocks have gotten hit. All the space stocks have gotten hit. So anyway, down 33%. We made great money on the prior one. We'll see what happens here. Silver, we have still the last bit of our back ratio. This one's a back ratio that worked out great. And at this point, we are at about $8.34. So our last profit was at 14. We are losing a little bit of volatility here. So even though we're not much above the lows, the implied volatility on SLV is not helping our trade. And so remembering that we have, let's take a look here. So you can see when SLV was up here before it imploded, implied volatility percentile was up at 110. Now we're at 94, which is pretty high, but we are down lower. And therefore, even though SLV is trading probably at or near its lows, we don't have as much of a profit in the rest of these. So I'm going to be monitoring this over the next week. So we have 2 of the 90 puts long and 100 short. So we're definitely deep in the money. And at the current price, we would probably have about $10 to harvest on our next closeout. If we were to expire here, the 100 puts would be worth a $70 debit, and the 290 puts would be worth two $20 debits, two $20 credits, and therefore we would have $10 in the trade at maturity if we were expiring. But right now we're at about $8.34. So not bad. I'm just giving this a little bit more time, but given that there's only about $1.68 to be made here, I may call an audible next week and just close this out, call it a great trade. But I think this is going to be a pie in the sky dream to get there unless volatility ramps up again in here and we go lower. Because really, at this point, I think most of the implied volatility is squeezed out. SPY, We closed out the inflection point spread that expired last week. We took our last tranche of that. That's not up here. What we have is the SPY bull, our bear put spread, the 690, 640 in April. And we took one profit target on Thursday at 17. We hit that. And now we're looking for 20. And you can see that we already are back down to about 1054 on yesterday's big rally, but plenty of time until expiration on this. And let's see where we got. Yeah, 69 days. So not worried about this at all. It's our lone remaining hedge in the SPY. And I think the next time we do a hedge, I'll probably go to the Qs for that. TLT, we rolled out our short put for the 13th time, and the TLT has rallied nicely over the last couple of days. We're only up 9% on this new one. It's a March 31st put that we sold for 90 cents. It's currently trading at 82 cents. This is the slow trade, and we have not broken down on the TLT. I think the lowest we got was 86.43. So as long as this keeps trudging along sideways, we'll keep making money on this. Will there be a moment where we stop making money? Sure. But this is not like Bitcoin. We're not going to plunge 10% in a day on TLT. Our final open trade is in XLP, and since the end of October, beginning of November, what a beauty this has been, from 75 to 88, $13, and that's almost 20% if you think about it. And we've harvested a couple profit targets. I think we have at least into, we can go to 90, but we are traversing the Bollinger Band. I think we're going to get pushed back inside the Bollinger Band at some point. But staples have been on fire over the last few days. I would not be surprised if we come back in to the 86 to 85 level. We have a PSAR dot here. I wouldn't be surprised if we come here and bounce if it pulls in. So hope you're participating and have some of these. And you know, if you wanted to, I'm not going to do it officially, but you could roll up your 80s up to the 85s or something to harvest some of the bring it into the money. I'm going to wait until we hit 90 and then maybe roll them up to the 90s to preserve our profits. But for now, I'm just going to leave it alone and keep the deltas right where they are. So our stop is now at break even. And even that, I think that we should probably bring that up to call it $7, $7.50, somewhere in there. That way we're just protecting our profits. I don't want to make it too close, but I also don't want to give a whole lot back because we have $10 in it. And I'm considering rolling it up. And if we get to that 90 point, then I will definitely do that. In any case, those are our trades. So let's take a look. We got 1, 2, 3 red, 4, 5. 5 out of 18 red. The rest are green. So much improvement over Thursday night. So hopefully you're participating. If you have any questions, at Trader Geek, Sam in the forum, Sam at optionmarketmentor.com via email. And if you're on X or Twitter, give me a follow on at Trader Geek. Hope you enjoy your Super Bowl weekend. And if you have any feedback for me, let me know. Otherwise, have a great rest of your weekend. And I will see you in the room on Monday. Take care, guys.